Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on the 1st of April 2013. We're going to use some time-honored techniques to understand modern markets. We're going to give it a go, and this is one of our featured daily technical analysis videos of the S&P 500 index. Before I get started, I need to read this to you, and that is: the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, looking at a 30-minute chart. Each candle is 30 minutes. You can see that today, with the weakness, the fact that we did not get over 1565 with that 1% margin apparently is significant. The fact that it is not significant is significant, if you know what I mean. It sure looked like the market was poised and ready to power on up to the 1580s, maybe even the low 1590s. But today just told us a different story, and that is, no, not ready to do that yet. And we are back sort of where we started as of Wednesday of last week, and that is underneath this 1565 line again, and eyeing this rising support line that will pinch the S&P in, without a doubt, in 4 days. What I mean by that is we have a destiny to be either above or below this pattern in about 4 days, because this is where these two lines meet. And after that, we're either going to be above it and heading up to the high 1580s or 1590s, or we're going to be below it and likely coming down to test support around the call it 1540. So guys, that's really about all that took place today. You can see an initial bounce on that line made it look like, well, Jim's smart. You know, he nailed it. Getting this line right here sure looks like we're bouncing, but then it just reversed back down and took that line out. Then once again comes up essentially to that line, and for a brief moment makes me look smart again by paying some tribute to that level. And actually at this point we're talking more like 1564. When I talk about 1565, that's not like something to the seventh decimal place. I knew a guy a couple years ago, great guy, from what I could tell, just knew him online, and he would have these targets that were like to the third and fourth decimal place in the S&P, and that's just nuts. I mean, that's never going to work like that. But so anyway, with a little bit of slop in mind, you could see that that the S&P tried to get back over that level shortly after lunch and failed. And it looks like we're probably gonna, head back and maybe give it another go. To be honest with you, these little candles at the end of the day are a difficult read, because they always have been. You sometimes get people who are just a little bit, maybe a little bit too antsy to cover their short positions, or maybe they're a little too eager to go long at the close. So, I'm not reading this last little green candle here with anything much in mind. All I can say is this line remains now, since we're back below it, this line is once again resistance, and this line should be support. Keeping in mind, here we have for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Really for the past 12 trading days, the market has gone sideways. So what happened was we were in a rising channel, this red channel here since the beginning of the year. We broke that channel, formed a consolidation pattern that had a target of about 1565. We called that target made here at about 1563, but the S&P went ahead and made that full target plus a hair more, and now it looks like there's a loss of direction that has been the predominant theme over the past 10 or 11 days, because we find ourselves now right where we were back then, having spent most of the time of the past 10 days underneath where we closed today. So this is sideways action that still could go either way. If you want to know what we're looking at as far as the pattern goes, we measure the first reactive move of the pattern, which is what we do with this little vertical line. And then if we break out, we know that if we break out here, since this is a nearly horizontal line, we can say our target is about 1594, 1595. But if we break to the downside, then it depends upon when that break might occur. So we can't really pinpoint a downside target at this point. I can tell you that I would expect there to be, I'm going to go ahead and stick this back here. I would expect there to be some support around 1540, just based upon the support we found there back in mid-March. If that gives way, then we have a bit further to go before we find support. We have the 1525 area, and all of these are horizontal, which makes it kind of nice. And if that gives way, then we've got another horizontal area of support around the high 1480s. And just to remind you, we have one rising support line that wherever this might be tagged, we would look to this line to also create a potential bounce. So for right now, we're just looking at some market indecision. And by the way, I need to let you guys know this. Starting on June 1st, I will only be accepting payment for the subscription site in scrap gold. No, that's an April Fool's joke, but it probably wouldn't be a bad idea. But I'm not going to do it. So, guys, there you have it. We're just back to where we were around the middle of last week. So if you want to go back and look at a video back then, I think that would work too if you feel like this isn't complete enough. But honestly, we just gave up what the market gave us on Thursday, and we're right back to where we were. So there you have it. I've said it before, eventually the markets will give us a decently sized pattern to trade on. Right now, it looks like it's all just little nickel and dime stuff. So take care. Thank you for your support. And play a trick on somebody before it's too late, okay?